The market has chip mania. Let's talk about it on the weekly update.
Okay, friends, let's talk about chip mania. Here's what you need to know. First up, market has caught a case of chip mania, and it's not just the market. I think it's just about everybody. My phone is ringing off the hook for Micron, SK Hynix, AMD, Intel, and the rest. So let's talk about chip mania today on the weekly update. First, we're going to do the S&P 500. This is the same way we've always been looking at it. Green and red candles, those are the daily closes on the S&P 500. Orange is the 50-day, purple is the 200-day. And what do you notice? Well, from the drawdown that we had in the Iranian war with a little poke below the 200-day moving average, then we had a gap up above the 50-day moving average, and it's been off to the races ever since. This run back to all-time highs was good, confidence inspiring. The gap up was fine, a great signal. Where we find ourselves today is kind of a head scratcher to me, frankly. I don't know why the market is as high as it is, but it is, and that's okay. The market is generally correct. So yeah, the market is giving us a signal here. The one thing that I will say, though, is if you look at volume on this rally, now volume is always light in every rally. It's usually the volume comes in when the market's coming down. Certainly we see that right here in the Iranian war period. But volume has been extremely anemic all the way through. And so what we have is kind of, I think everyone is mostly hedged, mostly protected in their portfolios, and they're just kind of like taking a flyer at some upside. But we really just have no sellers because everyone's kind of locked in, nice and hedged, good and protected. So even just a little bit of buying pressure is pushing the market very strongly to the upside. So it's great. Numbers are great. We're fantastic on the year to date. Everyone's making money. That's good. There shouldn't be anything wrong with that, right? Well, we'll see. It's a little suspect. We'll get to that point later. Let's talk about the war. The best thing to say about the war is I'm almost done talking about the war. We mercifully sort of have an off ramp here. It looks like Donald Trump is sort of extending the olive branch, kind of giving Iran everything that they want. It looks like, who knows? The reporting on the deal right now is saying that it looks kind of like the Obama-Iranian deal, which I think is a testament to how little we accomplished over there. Totally fine if we do that. I think the focus here is reopening the Strait of Hormuz, getting the U.S. military out of the Middle East, and then sort of reassessing from a strategic standpoint, why was this as much of a mess as it was? And at the beginning, I said, there's really only diplomatic responses that will end this, and that's the way I think it ends. I don't think there's a military solution. Trump is threatening, more military action if they don't agree. I think that's all bark and no bite. I talked last time, we talked about all the, movements into the theater. So we're there, we're ready to start bombing, at any moment, but I don't think that that is the correct thing to do. And in fact, as we saw with Project Freedom, moving some ships through the strait, apparently we took a lot of fire. The early reports are, missile capabilities, mine capabilities, ship capabilities for the Iranian military are still very much intact and quite dangerous. So I don't think we want to hit the hornet's nest again. So whatever happens here and on ramp, I welcome it. I think it's the correct decision here. I think we need to get out of there, and I think we just need to, take our leg out of the bear trap. Let's talk about what's going on in the market, and namely what's driving the market higher. We've got chip mania. Now, this is, something to see. What I'm showing you here on the left, this is the Kospi. This is the Korean stock index. The Kospi is up something like 220% over the last year, over the last 12 months. That is not an individual stock. That is an entire country's index. And what is driving the Kospi higher is what's happening in Samsung and SK Hynix. These are, foundries, chip makers, memory producers in the Korean market. And they're just going parabolic. They're running to the sky. It's the next stage of shortages coming out of the data center. Now we're very much in love with memory. And so anytime you see a parabolic move like this, we've seen a couple of these on the channel. We saw it in silver. Historically, we saw it in lumber during the, COVID lockdowns. Where else have we seen parabolic moves? We saw them in Bitcoin and cryptos. We saw them in GameStop. We saw them in short squeezes. And the lesson of every parabolic move like this is that it eventually exhausts itself, and eventually it comes down just as parabolically as it goes up. So that's not to say that there's anything bad going on here. I mean, these are real companies with real earnings power, and there's actually like good economic fundamentals underneath a lot of this. But you've always got to be on guard anytime you see a parabolic move like this. So the number one question that I have been getting over the last 2.5 weeks has been, hey, Brett, should I add some chip exposure? And so I thought what might be good is, let me just answer that here on the channel. Do you need, if you're in our stuff, if you're in the ETF program, if you're in the S&P 25 or any of our models, do you need more chip exposure? Well, let's take a look and see where you are just, at a broad sense. And then we can kind of sort of diagnose from there. So by far, if you look at our firm, our number one holding is the S&P 500. We like to own the S&P 500 because it's self-cleaning. It keeps you in the best parts of the market. You don't need to trade around a lot, so it's extremely tax efficient. But let's just go through the top 20 companies of the S&P 500. NVIDIA, chip company, largest weight. Apple has its own silicon, makes some of the best, open source AI machines that you can buy right now. I'm going to call it chip company. That's the number two. Microsoft, they're okay. Amazon has, I believe it's Trainium chips, chip company. Here's Google, a double slug of Google at 5 and 6. They have their TPU chips. Then here's Broadcom. Here's another chip company. Here's Meta. They have their own chips. I forget what they're called. Tesla has their own driving chips. They're a chip company as well. Here's Micron. Here's the memory stock. That's, doing this Kospi sort of thing. That's a 1% exposure to the index. Here's AMD. There's another chip company. Here's Intel. There's another chip company. Here's an Oracle, which is, connected to the data center build out. So this is just the top 20. And what do you notice? You notice that there's a tremendous amount of chip exposure inside the S&P 500. So if your stock portfolios look anything similar to the S&P 500 or start with the S&P 500 as a base, you probably don't need more chip exposure. Right now, the S&P 500 is roughly 40% chip or chip connected by market cap. That is a resounding amount. So yes, these chip companies are going parabolic, particularly the ones in Korea. Do you need more exposure to them? I don't know. You're already getting exposure to them. One of the reasons why the S&P 500, the way that we looked at it, that kind of like explosive move higher that we're seeing here, that's a head scratcher to me, is a result of all these chip companies starting to bubble up to the top of the S&P 500 and weight us and take us higher. So that's not to say these are bad companies. The earnings have been fantastic, but I wanted to at least diffuse some of that frantic dash for, hey, I need more chips. Give me some chips. I read about Micron last week and I need Micron now. I don't think you actually need to do that. So key takeaways. What does it all mean? 1, the market has been on a tear, led most strikingly by the chips. 2, an end to the Iranian conflict is adding fuel to this fire, going higher. With the caveat that how many times has an end to the Iranian conflict been said now? I think this conflict is the most ended conflict in history. I'm very excited to no longer talk about it. Number 3, I'm always on guard when narrow sectors of the market can carry things parabolically, and we are clearly seeing that in chips right now. Counterpoint to that is earnings have been fantastic. So what do I think if I were to render judgment on the market as of this point in time? Market looks great. Earnings have been fantastic. We're in an uptrend. Things are frothy, and we've dealt with that. If you follow the channel, I've mentioned things get frothy 3 or 4 times now if you've been watching regularly, and you know what comes after that. The froth will eventually come out. We're going to let it froth up right now. So there you go. That's Chip Mania. I'll see you next week for the news review. Take care. Okay, friends, that was the video. Hope you liked it. If you found it informative, good, entertaining, I'd love if you could scroll down here beneath the video and give me a like there. It helps us out with the algorithm. And then if you want to be notified first of anything new that we upload to the channel, if you come over here, click subscribe, you'll be the first to know as soon as we upload anything. Appreciate it. See you soon.